How is it going, Forex traders? My name is Desmond Samuel, and I am back with another episode of our Forex Forecast. So to kick things off here, we have the dollar index in our hands on our screen, as you can see, like so. In the recent week, in this most recent this past week, we've had the dollar collapse a bit, not necessarily collapse, but just pull back weaken a bit because the market actually came into this supply level somewhere around here and then just reacted off of that. So bear in mind that my actual target for the dollar remains 114. However, we have to pull deeper into 105, at least retest and play around this demand level somewhere like so before actually blow out all the way to 114 and subsequently probably 120. All right, so for the XY here, it's very simple. Yeah, let me minimize this guy. So for the XY, it's very simple. Obviously, we have a supply level somewhere around here which you want to watch out for. So if you're bearish any excess USD pairs, you really want to watch out for this guy because this is a supply level that the market will most likely roll over. So I still have 105 as my region that I'm actually banking on seeing this guy pull back into. But first of all, we have to come into what happened. But first of all, we have to come into 108.763 before actually roll over all the way to 105.563. So that's that for the light index. Let me see how it looks on the daily time frame. And subsequently, so yeah, even the daily time frame also confirms that because we're actually out of this downward trend here. If you look closely on the dollar index, you can see that we're actually out of this downtrend, and then the market just spiked out of this range here. So now we are actually back below the supply level. So I'm actually looking at this guy closely because first of all, we have some 4-hour demand level at play. So it really does depend on your own approach to trading because a lot of people might see this as the actual bottom and then look to buy this guy long term. But quite frankly, I'm not comfortable with this whole pullback, seeing that we have so much space to the downside right from 107.200 all the way to 105.563. A lot could happen at that point here. So I am actually looking at two things here. Two things is either we actually continue heading lower, or we just come into 108.763 and then probably just reverse. But I kid you not, this is a supply level and the market actually reversed at this point in the past. So you most likely would want to pay attention to this guy because we could actually come in here and then just melt all the way back down to our actual initial demand level, which was somewhere around 105.563 region, somewhere around here like so. So once I see that decent decline on the dollar, then I think that would give me the go ahead on the rest of the pairs like the USD CHF, the USD CAD, and then the likes. All right, so for this guy, I'm bullish long term. I am pro dollar actually. I'm pro. This guy is bullish. All right, this guy has been bullish for years. It's not just today became bullish. He's been bullish for years. Like if you look at the weekly time frame, you can see from 2021 all the way up through to 2023, we are actually bullish all through. So this was more or less a pullback, consideration, some form of consideration whatsoever, and then market just came out here. So we blew out of the range. Technically speaking, let me just look at things clearly. Let me see if you guys are in this guy. All right, so technically speaking, we had this range here, and then the market just blew out of here. So do not in any form or in any way think that the bullishness for dollar is as elapsed. It hasn't, because if you measure the amount of pitch right from the bottom to the top of this range, you could see that we still have some room to the upside upon this breakout. All right, so this, let me just do that properly from bottom to top. What's wrong with my mouse, man? I think every trader has like a bittersweet relationship with their mouse because I don't understand. What's wrong with you? Oh. So if you measure this guy like so and then extend it out, you can see that we have some space to the upside. We should have some room to the upside. Kid you not, this market is poised to rally into regions of 114. Or do we have some supply level at 112? But when we get there, we'll actually cross that bridge. But for now, this guy is poised to head to the upside. I kid you not, I actually look at this guy moving into 114 long term. Right? I'm pro dollar. I'm actually very bullish on the dollar. However, I feel like we have some space left here. All right. Not like I can see we have some space here at 106.000 region. So the market just needs to come in and then fill up the gap before actually do. So that's just that for the XY. I kid you not, if I see this guy blow all the way through the roof, I will not be surprised. Alright, if I see this guy roll over his head, I will not be surprised. But I'm favoring this guy. I'm actually waiting for this guy to pull in deeper, towards 105. But in the event that it doesn't happen, guys, you know how we do it now. We always kill in and then find positions. Alright. So the next pair on my list now will be gold. So gold has been giving us some serious amount of pip lately. If you missed out on my earlier analysis, you can actually go back and watch my previous videos, which will actually help you learn how to analyze the trade properly, learn how to do top-down analysis, learn how I actually. So as you can see clearly, this guy has been making series of higher highs and higher lows, and I don't see this guy stopping anytime soon until we blow through, get through to $3,000 per ounce for gold. All right. So now from the weekly time frame, actually every single thing has been briefed right from the weekly time frame to every single time frame you can think of. These guys are making series of higher highs and higher lows, and it is not showing any sign of stopping anytime soon. However, from this initial stretch, guys, this is there a problem with my mouse? Is there a problem with this guy? So from this bottom all the way up here, we could see that we actually have some space to the downside after we smash our prime targets. So right now, as things stand, we are actually poised to $3,000 per ounce. There is absolutely nothing standing in the way. This guy is actually poised to rally into 3K as it stands. This TP1 has been smashed through. All right, so now the market is actually pointing aggressively to the upside. So you scroll down to the daily time frame clearly, you will see something that looks very decent. So as you can see here, we had this form of pullback here where I just used a counter trend and then entries were somewhere around here and then stops. Obviously we had earlier entries somewhere around here and then stops were always going to be below structure once you scale onto the 4 hour on the 1 hour time frame. This is the 1 hour time frame structure or the 4 hour time frame, although I actually advise you execute your trades on the 4 hour time frame. All right, so you can actually get this guy so as things stand here, for us to rally into $3,000 per ounce, I would actually be banking on this guy pulling back into 2,740. That is the recent demand level before we actually continue higher. So scaling down to the 4 hour time frame is exactly how things look. On the 4 hour time frame, we have this market has moved very beautifully, like series. So although we've come in here and we've capped somehow, we have actually capped here. As you can see, this is a double top formation, almost a double top formation, looking like it's going to complete. So if this guy should complete, then we definitely will see this guy roll over into $2,040 per ounce. And then once this is said and done, we could actually be blowing this guy back all the way to we will actually be bring this guy back all the way to 3K. Once this guy decides, so it's either it breaks above here or it continues dropping lower to our prime second prime demand level, which is at $2,740 per ounce. And it's either we break above here or we actually collapse deeper into $2,740 per ounce. And in this case, I'm actually favoring this guy, although all trades are locked in, running in profit. But should this guy pull back into 2040, I'll be here to let you guys know, which is why I urge you to go ahead and subscribe to the channel. Make sure you subscribe to the channel and turn on the bell icon. Alright, turn on the bell icon so that once I drop, you will know. Look at a lot of traders would have lost money on the crude oil trades, but because you guys had your bell notifications turned on, you guys subscribed, and I came on here to clarify things. And like, guys, do not buy oil yet. Too. This is what's happening. This is what I've seen is happening. And thank goodness you guys had subscribed and turned on the bell icon, because bro, you guys would have lost tons of money. All right, would have been else after else. So you have to be on point with me. You have to be on the same wavelength as I am. So please, as you subscribe to the channel, make sure you turn on the bell icon. And you could decide to be ready anytime. This guy is volatile. It won't take it an entire week to go from here to here. Believe me. Gold is quite quick. You see gold, you see BTC, you see crude oil, you see USD. All those pairs are quite volatile. So as this guy looks now, so he's pointing to the downside. Once we are able to break out of this range, because this is more or less a range formation here. So once we are able to break out of this range, this guy is falling all the way to $2,740 per ounce. And then by then I'll come and let you know how you're going to enter the trade, the things to look out for, and then if at all we are even going to execute the trade. Do you understand? Nonetheless, here we are actually poised to get into $3,000 per ounce once we clear this minor, whatever this minor range here. So once we clear this minor range, we are actually headed straight to $3,000 per ounce. I see no deep pullback in sight for gold until we get to $3,000 per ounce. Then obviously we will actually know if this guy is gonna actually pull in deeper or just blow through the roof. But so far so good. Gold has been very, very linear. I'm not gonna lie to you. Gold has been in a very linear trend. Hasn't given anybody any sort of pullback whatsoever. And if you look on the weekly time frame, this is more or less a head and shoulders pattern here. So this is the head, this is the left shoulder, this is the right shoulder, and technically speaking, the market ought to come back and test the neckline. That's technical analysis 101. That's chart pattern 101. Do you understand? So this is a head shoulder. This is an inverse head and shoulders pattern here. So this is a head. This is shoulder. After blowing out of the range now, the market ought to actually pull back into the neckline, literally before continuing higher. But this guy has been just going higher and higher and higher. So best believe when gold is ready to pull back, it's gonna pull back deep. All right, it's gonna pull back deep because this whole move is very linear. You have stretched gold. We have made gold enough. Sorry, not enough because we start to smart to 3K. So you have actually made money from gold enough. So it's just it will just be very, very normal if market just decides to take a breather and then just come in for that deeper pullback. All right. So that's just that for gold. So gold $3,000 per ounce is sure, it is clear, live and direct. Gold is actually very, very clear. It clear that, all right, very clear. Nothing. This one is not ifs, buts, or maybe it's very clear to 3K. And then guys, I've been seeing something on. Okay, let's talk about Euro USD real quick because I've been seeing something on the S&P that would actually interest you guys. But yeah, let's talk about other pairs. So for NZD USD, I have no trades executed on this guy yet. You guys saw the level I drew. This guy just broke out without any single pullback whatsoever. So that's why I'm actually sitting on my hands when it comes to a bunch of the XSS USD pairs. All right, because I really want to see that deep pullback. Give me that pullback that gives me a decent entry confirmation so I can go ahead and execute this guy. I'm not very comfortable executing trades. Yeah, I'll not lie to you because this is no man's land. Literally, this is just no man's land. Do you understand? This is just no man's land. So I am not very comfortable with executing trades mid range. I rather have the market pulling into key levels or minor levels for me to actually go ahead and trade the bounce off of those levels. Comfortable trading pairs mid range. I rather allow the market pull back into technical levels like the minor support, minor zones or key levels. Anyhow, just put into a decent support or resistance level for me to actually go ahead and then trade the bounce. As far as this guy remains in this range, well, I'm not really the kind of guy that likes range trading. I'll not lie to you. But for those of you guys who would like to double in and out of ranges, let me see. It's not even double in and out of here, man. Just let this guy be. Just let this guy be. All right. So let's talk about the euro. So the euro seems to be collapsing. Apparently you guys made money from this initial move here and then market just folded all the way back up. This is very, very normal because why? You actually hit a 100% retracement points. Do you understand? This was like swing high, swing low. Market came in here, then so this is like your first TP. The market will always react to first TP. You would always pull back from there. This is very, very normal. This does not negate. This does not in any way negate our initial direction for this pair, which is very, very bearish. I see no reason as why this guy should even collapse further. It's definitely going to collapse further for the euro dollar. All right. So right now there's no way you can actually make any entry whatsoever because this guy's mid range. Okay, so you could easily execute the trade and unless you see you get come. You understand coming deeper or whatever thing wants to happen, but allow the market to break out of the range. Right now we are in a range. This is bouncing in between 1 and 2. Allow the guy to break out of this range. If it breaks below this green bar, 0.989687. Alright. If it first of all parity 1, then 0.9. Let me just put this guy right so you guys don't be overly ambitious. Alright, so once USD breaks out of this range or even this trade, you should be targeting parity. Parity is this rounded figure here where the euro and the dollar are actually equal. So parity with the dollar is at 1.00 whatever. All right. So once this guy breaks this green bar, he's definitely coming here to take a breather, and then subsequently we could actually see this guy collapse all the way to our initial target. So next point here will be the pound sterling. The pound sterling also has a very, very decent, guys. The alert I left on pound sterling has been there since like forever. The market is just stalling. Like, what is the problem? So apparently the pound sterling is very, very weak versus the dollar at the moment. So this market is not even looking like it wants to come into my deeper point of interest here. So I'm just gonna watch this guy closely to see what happens. Like I said earlier in our previous weekly forecast, I said to you guys that once this guy breaks below this point here, entries we made. All right, entries we made once the guy clears his bar. Once he clears his bar, it's very very simple. All you ever have to do is just come on here, execute this trade, put your stops above short term, allow the market roll over. All right, it's just easy. Forget about the fact that you have a few. This is not few pips, so this is 260 pips actually. So you have enough pips, enough pip round to play with. All right. So that's that for the pound sterling. I don't see this guy. I don't foresee any surprises on this guy. Although the dollar could actually be pulling in deeper, but we're actually looking at that guy closely. If the dollar decides to pull in deeper, then obviously you see that this guy will actually pull in deeper as well. So that's just that for the pound sterling. So let's talk about USD CAD is actually poised to drop deeper. USD CAD has to come into 1.400 region. Remember our initial POI, which was somewhere at 1.400, somewhere around here. So this is more or less a double bottom here, and then this was a neckline break. Then the first back was there. So I definitely expect the market to come into 1.400 region somewhere around here. Then give me like that decent retest. Give me a very very beautiful bounce, because like it or not, this is the demand level. This was where the market took a pause before continuing higher. So when coming down, the market will always stop by to say hi to this guy. Right, so you always stop by to say hi to this guy. That's even if he wants to continue lower, or if it is coming back at all, it will always stop by this guy and then reverse. So what I'm saying is this is the demand point. I'm actually waiting for USD CAD to pull it. As you can see, this is the weekly engulfing candle. Guys, we picked out of here. First of all, we actually broke above this high. This last time the market got here was in 2020. All right, so we actually broke above this high, and now we're actually starting to pull back. So we put in a fake out more or less, and the market is actually starting to pull back. So the market closed bearish engulfing weekly. That, as for last week, it was in it engulfed 1, 2, 3, 4, 5 guys. 1, 2, 3, 4, 5, 6 weeks of trading. This one whole week engulfed. All right, so the market is looking heavy. All right, so the market could actually continue lower to 1.400 region somewhere around here. Then once that is said and done, best believe, best believe, it actually headed higher. All right, so my prime target for the USD CAD will always remain recent high. Let me see if there is any place that we need to actually. Let me see this guy. Okay, all right, so we have beautiful. Guys. I have a beautiful high here to target as well though. No, this is bread though. Hold on guys. I think I'm seeing money here. Hold on. See this guy now. So this is a double bottom now. This is a neckline break with us now. This guy has to come in deeper, man. Once this guy test this point properly, man. Yeah, bro. This is money. Oh. Let me see how many bips you have from here to here. Whoops, 1,000 plus bits, guys. No jokes. No jokes. Let me check something real quick. Sorry, guys. I think I'm starting to find interest in USD CAD, man. No jokes at all. Because the market always moves from one level to the next level, yeah? Let me see something. In between, you had like inverted head shoulders pattern. So the head, shoulder. We are actually at this supply level somewhere around here. So okay, so obviously the market is still reacting to this supply level here that actually knocked price down twice. So it still cannot afford to throw caution to wind. But as it stands like this, one more man, I'm seeing bread. I'm seeing money, guys. I know what are you guys seeing? Are you guys seeing money? Let me know what you see on this chart, guys. But I'm actually very bullish on USD CAD long story short. Let me see if I can put up some trend lines like so. All right, beautiful. So this guy has to come into this bar right here and tap nicely into my 1.400. Obviously, you're always gonna get reaction, guys. If the market has reacted to any demand level, supply level on the weekly time frame or anywhere, guys, it will always react. It will always get there again and do what react, because market always respects levels. Sometimes not the minor ones on your 15 minute time frame and 1 minute time frame. I beg you. Weekly time frame, daily time frame looks very decent. The market will always react to that. Monthly, solid. All right. So what I need to see now on USD CAD is very simple. Pull back into 1.400. This thing is giving me some strong vibes. Pull back into 1.400. Okay, 1.4. 1.4, then we blow out potentially to 1.5. I know this sounds ambitious, but guys, I'm not gonna lie to you. Like what I'm seeing on USD CAD. Let me see something real quick. Let me see. Let me just check. This guy out. His range from here to here. Okay. And we're gonna range from there to here. Okay, so yeah, always expect TP1 to be, like I said, recent high if you're buying, and then recent low if you're selling. So TP1 is obviously this green bar. Then subsequently, once the market actually this green bar, so once the market actually goes through this guy, you have space all the way to 1.59388. I see no reason as to why this squeeze will not happen. And in the event that this doesn't happen, I see no reason as to why this will not happen. And in the event that it doesn't happen, guys, literally you are subscribed to my channel, you have turned on your bell icon, so nothing will catch you by surprise. Believe me. Your guy is here. Your guy is here. It's either you join my Telegram community or you come for mentorship, obviously, and then you actually turn on the bell icon, and guys, nothing will catch you by surprise. As far as you are subscribed to this channel and you turn on the bell icon, you consume this content. By now, you ought to even know how to break down charts, but that's by the way. So next pair on my list now would be BTC. So I'm looking at BTC closely, guys. I'm looking at BTC closely, and quite frankly, what I'm seeing. Let me see something real quick. Yeah, guys, I'm looking at BTC closely. Oh. I am looking at BTC closely. Like this guy. Long story short, for BTC, yeah, if we are able to break now, I'm not trying to create panic. All ye crypto boys, calm down. So guys, I'm looking at BTC, yeah, guys. I've been looking at BTC one eye for a while, guys. If we are actually able to clear out 95,794 points, practically 95,000. So once if we are able to clear out 95,000 or this 90K region here, we have space all the way to 60K, man. It is very possible, guys. Because now, if you look closely at BTC, first of all, we had a demand level somewhere around here that the market had to come into and tap into. Then also, guys, now, if you look at BTC closely, we had a demand level somewhere around here that the market ought to come into and tap into. Then also, guys, use this to learn. Use this to learn, because now we have it is okay to draw your demand and supply on whatever levels, but it is entirely up to the market to choose whether it wants to respect that or not. Because we had a demand level here that we are banking. I remember calling out BTC to 40 something K. This one was a public L. It didn't come. The market just forwarded, and bam, to the upside. All right. So you have to be careful. And then this was even a double top with a lower high from here. So you see, the market is very, very dynamic. That's why you must be on your A game. Must be on your A game. You must subscribe to the channel. You must have your tools intact. You must have proper entries and exits, and you must be dynamic. You must be open to being flexible. If you're a trader, you have to be flexible. There's no rigidity here. Cannot be rigid with these guys. You have to be flexible. Be open to changes, rapid changes in the market. All right. So as things stand here for this guy, is very, very simple. For BTC, I foresee a pullback. I'm not saying a collapse. I'm just saying a pullback. All right. A pullback into regions of maybe of about let's not be overly ambitious. Let's put it here. So at, let's say, minimum 60,000. Minimum $60,000 per coin for BTC. If you're able to break out of here, because if you plot your fibs really, really well, you see that we are practically at the not point 618 and 0.5 is the demand level somewhere around here, and which lines up perfectly with the whole impulsive move. So like it or not, if you're able to clear out this 95K, we have space to 61,000, 64K, 61,000. This region is where we have space to. So imagine catching all of this move from here to here. That's why you have to subscribe this year, guys. This year is about making money. All right. So we have space all the way from 96 bands. So you have space all the way from $95,000 all the way to 61K. All right, space. Once the guy can clear this space, this bar here, we have space to fall into. All right. So to round this up here, let's talk about the S&P 500. So now, for the S&P 500 here, let me get rid of what are these lines? Oh, I was teaching. So for the S&P here, this is exactly how things look. So from the first of all, guys, forgive the lines. I just like to get rid of all of these things if I actually want to understand my chart properly and just look at it naked. All right, so for the S&P 500 here, you see now this exact same move here happened somewhere around here, where the market had created the demand level somewhere around here, like so. This was a demand level, like it or not. All right, so the market had actually put in a very linear move from point A to point B, and then just kept on giving us a very linear curve until it came back for that pullback. All right, so as things look here, is very, very simple. The market will always pull back, and then obviously this was even half the what is this? So this was even half the impulsive rally from here to here. All right, the market came into this point, right? Let me see if it was. I doubt it was any Fibonacci. Oh, there was actually Fibonacci play. So, so the market came into the 0.5 region here and then rally, and that's why you see, those of you guys that are actually very adamant about the 0.6, the market doesn't always see the 0.5 region and the 0.6 when are just zones. There's no, it's not a line, it's a zone. The market could choose to react off of any one. So you must have certain things in place: entry criteria, exit criteria. You must not use your Fibonacci. I think I'm gonna make a video on how to use Fibs once and for all to just clear out this whole haze, guys. You have to learn how to use your Fib properly, otherwise you're gonna get burnt. So moving on from there, the market actually tested it nicely and then rallied to the upside. Now on this way up, this market gave us an inverse head and shoulders pattern. So this was a head, shoulder, shoulder pattern somewhere around here. Not naturally the most neatest, clearest, cleanest textbook head and shoulders pattern, but you always have that inverse head and shoulders pattern shape forming, just more or less like an inverted. Let's get you accustomed to this. So these are looks, all right. This is the inverse head and shoulders pattern that was formed somewhere around here, and then this is the test value. All right, so simple. See, so inverse head and shoulders pattern here. So inverse head and shoulders pattern here, neckline break and retest, and then rally. So we didn't have any descent pullback after that too. We have any descent pullback, and now if you take your Fibs from recent low, this is the most recent low, all the way to the high, to the point here, you can see that this is not how to draw it. So you put it from here all the way to this point, so you can see that the market is actually poised for a pullback, a very deep pullback, and by that I mean towards 4,800 basis points. Now I know I called out S&P to 5,000 basis points, but guys, to 4,000. Now I know I called S&P 500 all the way to 6,500 basis points, but as things stand here, we are actually capped at this point. I'm coming to put in a double top. The market is looking like it's exhausted. All right, it's looking like it is looking exhausted. So first things first, we actually look at this guy very, very carefully, because now if you let me put my let me show you guys something real quick. All right, so from all the way to the bottom here, very nicely, you can see that the market is actually decent, still in an uptrend, no doubt. Let's see if we have another trend line to work with. Yeah. So you see, every single thing is pointing bullish, but this market is just starting to thin out, or just starting to lose momentum a bit around this point. So I kid you not, if I see this guy break this lower part of this range here, guys, we are falling all the way to at least 5,000 basis points. At least 5,000 basis points at this point here. Definitely the market will fall. If we do crash below this 5,000, 830 region, we should actually drop all the way to 5,000 basis points. I know you guys have seen my my predictions to 6,500 basis points, no doubt. But guys, you have to be, like I said, be flexible to changes. This guy is looking weak at the moment, and you have to also study the pullbacks. We have linear pullbacks, we have linear trends. This is not looking healthy at all. Although the S&P is always trending bullish, it's always going up, never really comes down. If it ever comes down, it's more or less a pullback. But yeah, that's why I'm saying that the market will most likely pull back into this point, because now we had the first pullback, second pullback here. This is the third one that will come in for that deeper pullback for actually continue higher. So in any case, here we're actually very, very bullish on this. I'm still bullish on this guy, but in the event that I do see us clear out 5,830.57 region, we should actually see this guy collapse all the way to 5,000 basis points. As simple as that. I don't think there are any other pairs to talk about. So let's talk about USD JPY real quick. So for USD JPY, we have the weekly demand level that I'm actually looking at closely, because, like I said, the market came on here and then bolted up from there. All right, and then this level was once a supply level that actually knocked price all the way back down. So I don't expect the market to just come here and then break below. Obviously, the market will always react to it. So whether or not the market actually continues headed lower is entirely up to the market. But as far as we are concerned, we are taking this bias around here. I'm taking this bias from here, all right, because this is the weekly demand level. Obviously, this is solid. Do you understand? It might not necessarily reverse price all the way to our all-time highs, which was at 161.162. However, the markets will always react to demand and supply levels. All right. So, like I said earlier, you have to be open to being flexible. You must be flexible, be open to changes real quick. All right. So the market is poised to come into 150, actually filling out at 150. So once I see that decent bounce, you see the way the market rested here and gave us that double bottom and then bolted out. Once I see that decent rest and then a reaction on there, then I'll be definitely back here to let you guys know, which is why you have to subscribe and turn on the bell icon so that when I'm back here, you don't miss out any trades. Guys, this year is packed with lots of trades, pullbacks up and down, collapses happening. Guys, the euro is going, the pound sterling is going, AUD is going, NZD is going, gold is about to smash through TP, all right? And you're able to take these trades with me because you actually subscribe and you turn on the bell icon. So please subscribe. And that brings us to the end of this episode of our weekly forecast. I'll see you guys in the next episode. Be safe, trade safe. As always, I'm always watching you guys from the shadows. Don't worry, we have lots of surprises. And then also check the first comments in the comment section here. You bring it straight to my Telegram community. All right, like minded traders, guys. I have traders trading the stock market, trading the risk synthetics, trading the crypto futures. You name it, guys. We have people there. Just come and meet your like minds. All right. So thank you so much, guys, and I'll see you guys in the next episode. Peace out.